When I first stepped into the world of markets, I made the same mistake almost every trader makes. I thought the market was chaotic, unpredictable, random, a battlefield of buyers and sellers throwing orders with reckless intensity. It took me years to understand that the market wasn't chaotic at all. I was simply blind to the law beneath the movement. Every chart you've ever looked at, every candle, every sudden rally, every violent drop, is not just price action. It's behavior. It's the psychology of millions expressed in a single line. Charles Dow understood this better than anyone. He believed the market wasn't just a financial instrument. It was a language that spoke through trends, reactions, volume, and faces. A language that could be read by anyone who learned to stop predicting and start observing. Most traders still haven't learned that lesson. They search for strategies, but ignore structure. They chase breakouts, but miss the foundations behind the break. They react to headlines, but don't notice how price behaved hours before. And that's where this story begins. Not with charts, not with indicators, but with the mindset Charles Dow wanted traders to have long before technical analysis even existed. Dow believed that price contains truth, not opinions, not forecasts, not predictions. Truth. And that truth shows itself not in dramatic moments, but in the quiet ones. The pauses, the pullbacks, the hesitation, the way price responds after it gets pushed. The real law of the market doesn't reveal itself to the impatient. It reveals itself to the observer. As I take you through this documentary, I'll show you how this hidden law operates beneath every modern market. Stocks, crypto, forex, commodities. Different worlds, same psychology. And now that we've opened the door, let's step deeper into Dow's first great insight. Markets lean before they move. Let me show you what that means. If you watch price long enough, I mean really watch it, you begin to notice something strange. Before the breakout candle, before the trend shift, before the explosion in volatility, the market leans. It tilts its weight. It tests direction. It whispers long before it speaks. This is the part of Dow's philosophy most traders never understand. Trends do not begin with strength, they begin with behavior. Dow observed this in the early 1900s while studying railroads and industrial stocks. He noticed that before a major move happened, the market started acting differently. Pullbacks became shallow. Rallies became smoother. Volume shifted subtly. Reaction lows held firm. Price hesitated, less in one direction than the other. These were not signals. They were character changes. Modern traders often ignore this because indicators can't show character. Only raw price can. Think of it like this. A person doesn't sprint without leaning forward first. A ship doesn't turn without first slowing its current direction. A trend doesn't reverse without first losing momentum. Price always reveals intention through its reactions. When a level that normally breaks suddenly holds. When a pullback that usually dips deeper suddenly stays shallow. When volatility dries up right before a move. When price stops respecting the old structure and begins respecting a new one. These are the early signs of the hidden law taking shape. The law that says, movement follows intention, and intention appears in reactions. Dow didn't have charts like we do. He didn't have computers. He had nothing but tape, raw numbers, printing on paper. And yet, he read intention clearer than most traders do today. Because he wasn't looking for patterns. He was looking for behavior. Now that we understand how markets lean before moving, let's go deeper into the architecture beneath price. There's a rhythm beneath chaos. And that rhythm is the heartbeat of Dow's secret code. If you zoom out from the noise, from the tiny battles happening inside every candle, you begin to see something the untrained eye always misses. Price moves in waves. Not perfectly, not mathematically, but rhythmically. Charles Dow discovered that markets don't move like machines. They move like living organisms, expanding, contracting, breathing. Every trend, no matter how strong, moves in two parts. Impulses, the strong, emotional move. Reactions, the quieter pullback, where the market reveals its strength. Most traders only look at impulses. They chase the movement. They react to the breakout. They get hypnotized by the drama. But Dow focused on the reactions. Because reactions tell the truth. A strong trend doesn't reveal itself in the burst. It reveals itself in the pullback. A weak trend doesn't reveal itself in the drop. It reveals itself in the recovery attempt. Here's the modern version of Dow's insight. In a strong uptrend, pullbacks shrink. In a weak uptrend, pullbacks grow. In a strong downtrend, bounces are short. In a weak downtrend, bounces are deep. Why does this happen? Because trends aren't lines. They're pressure. And pressure always shows itself when the market breathes out. Dow believed that these waves were the fingerprints of strong and weak hands interacting beneath the surface. Strong hands are patient. They accumulate slowly. They don't panic during pullbacks. They buy weakness, not strength. Weak hands chase. They rush in late. They panic quickly. They buy highs and sell lows. Waves reveal this behavior. Waves reveal intention. Waves reveal the law. And once you understand this rhythm, you stop fighting the market and start reading it. In the next section, we go deeper into something more important than waves. How to read the hidden signatures of strength and weakness. The fingerprints of real market intention. Every move the market makes has a signature. Not a pattern. A signature. A unique mark that shows whether the move is backed by real conviction or just emotional noise. Charles Dow didn't talk about strong hands and weak hands the way modern traders do, but he understood the difference intuitively. He believed that the market reveals itself through confirmation, not confirmation from indicators, confirmation from behavior. Here are the 4 behavior-based signatures that tell you the strength of a move. 1. The depth of pullbacks. Strong trends have shallow pullbacks. Weak trends have deep ones. 2. The speed of recovery. Strong trends recover quickly from dips. Weak trends hesitate. 3. The behavior near previous highs/lows. Strong trends break resistance cleanly. Weak trends struggle or fake out. 4. The tone of volume, not the number of the behavior. Strong trends rise on expanding volume and fall on contracting volume. Weak trends do the opposite. Dow believed that volume and price needed to speak the same language. If price moved but volume disagreed, the move was lying. Today's markets have changed. But human behavior hasn't. And this signature still shows up across stocks, crypto, forex, everything. Now, once you understand how strength and weakness hide within the movement, it's time to decode something deeper. Every major trend unfolds in phases. And understanding these phases is key to seeing the law beneath market movement. Let's explore them. Charles Dow believed that every major trend has 3 phases, not because the market prefers 3, but because people behave in predictable cycles. Now I won't repeat Dow's classical names. Instead, I'll translate his philosophy into the language of the modern trader. Here are the 3 phases as they appear today. 1. The quiet phase. This is where the law begins. Price stabilizes. Reactions soften. Weak hands have exited. Strong hands quietly enter. There is no hype, no excitement, no obvious reason to buy. This is where smart accumulation happens. 2. The recognition phase. This is where the trend becomes visible. Pullbacks hold, breakouts clean up. Momentum builds. The tone of the market shifts. Traders who study behavior, not noise, recognize the change. This is where the majority of the trend's profit lies. 3. The emotional phase. This is the final stretch. Emotions peak. Volume explodes. Everyone who was skeptical becomes convinced. Every voice says this will go forever. Dow believed this was the riskiest phase because the law weakens here. The internal structure starts breaking. But traders ignore it because emotion blinds them. These phases repeat in every major move across every market in history. Not because of algorithms, not because of fundamentals, but because human beings don't change. And understanding these phases prepares us for a truth Dow understood deeply. The biggest enemy of the trader is not the market, it's themselves. Which brings us to the next section. If the market already gives clues, if price reveals intention, if behavior shows strength and weakness, if phases repeat across history, then why do traders still lose? The answer is simple. They break the law because they cannot control themselves. Dow believed the market was an average of human emotion. And those emotions, fear, greed, impatience, denial, cause traders to misread everything. Here are the 4 psychological traps that break traders more than any chart pattern ever will. 1. Impatience. Traders want the move before the move even exists. But Dow taught, the trend is revealed slowly. Respect that. 2. Confirmation bias. Traders look for what they want to see, not what the market is actually saying. 3. Emotional trading. Strong trends require calmness. Weak trends require caution. But emotions invert this logic. 4. Attachment to predictions. Dow never predicted. He reacted. He let the market confirm itself. Modern traders still fail to learn this single lesson. But the good news is, once you understand your own psychology, you can see something deeper. The market is not against you. It's simply indifferent. It rewards behavior, not brilliance. Now that we understand the enemy within, let's explore the quiet battle that shapes every trend, the silent war between strong hands and weak hands. Every chart is a battlefield, not a buyers v sellers. That's the surface level story. The real war is strong hands vs weak hands. Tao understood this clearly, even if he never used those exact terms. Strong hands trade with intention. Weak hands trade with reaction. Strong hands plan. Weak hands panic. Strong hands buy when everyone is bored. Weak hands buy when everyone is loud. This battle creates the structure of the market. Accumulation, trend building, momentum, distribution, collapse. Every move you see on the chart is simply one side winning and the other side losing. Dow's greatest insight was that the market's larger forces always leave footprints, not because they want to, but because they cannot hide their behavior. Strong hands buy slowly, build positions quietly, support price during reactions, sell during emotional surges. Weak hands chase breakouts, panic on pullbacks, buy the top, sell the bottom. Once you begin reading the chart through this lens, you no longer see randomness. You see intention. And once intention becomes clear, the hidden law becomes visible. Now it's time for the final section, the part where we combine everything into one principle that governs every market on Earth. Now that you've walked through the layers of Tao's mindset, direction, rhythm, strength, psychology, strong V's, weak hands, it's time to reveal the law that lives beneath all of this. A law so simple that most traders ignore it. A law so powerful that it guides every trend, every reversal, every rally, every collapse. Here it is. The market discounts everything and reveals intention before movement. That's the law. The market doesn't wait for news. It doesn't care about predictions. It doesn't need your opinion. It acts on collective psychology first and explains itself later. Every major move in history followed this law. First, in behavior, then in structure, then in trend, then in emotion. If you learn to read intention, you stop being surprised by movement. Tao's code is not a system. It's not a strategy. It's not a pattern. It's a way of thinking. A way of listening to the market instead of fighting it. A way of observing behavior instead of predicting outcomes. A way of respecting trends instead of resisting them. The hidden law is this: price is never random. It is simply misunderstood. Once you understand this, trading transforms from a battlefield into a language you can finally read. And that is Charles Dou's real gift to the modern trader. There is a moment in every trend where the market whispers before it speaks. A moment where strength begins to concentrate, but the charts still look quiet, almost sleepy. Most traders don't notice it because they're hunting for breakouts, patterns, or dramatic candles. But Charles Dou believed something different. That strength is not shown in movement, but in the quality of movement. When I finally understood that, it completely rewired how I view price. Strength isn't just higher highs. Weakness isn't just lower lows. Those are symptoms. The real signal lies in how the market behaves when it gets tested. Let me show you what I mean. When a trend is healthy, pullbacks are shallow. They look controlled, like someone gently pressing a brake. Volume dries up. Volatility shrinks. It's as if the market takes a quiet breath before continuing. But when a trend is dying, pullbacks suddenly deepen. Candles grow heavier. Reactions slow. The market stops feeling like a river and starts feeling like a tired runner. These subtle differences, that's the pulse Dow was talking about. It's the behavior inside the swing, not the swing itself. Most traders ignore this because they're addicted to the big moments. But the big moments are usually traps. Breakouts that fail. Rallies that collapse. Reversals that appear out of nowhere. Yet none of these actually come out of nowhere. The market gives early warnings, not through price levels, but through effort versus result. That was one of Dow's greatest psychological insights. If the market applies great effort but achieves very little, something is wrong. Think about how powerful that is for us today. If you see a huge surge in volume, a strong candle pushing upward, but the next candle shows hesitation, weak follow-through, or immediate rejection, that's effort without result. It means the push came from traders, not from true demand. Modern traders call it absorption, distribution, exhaustion. But Dow explained it long before those terms existed. He wasn't talking about indicators. He was talking about behavior, intent, commitment. Understanding the pulse of a trend means you no longer need magical signals to decide whether to stay in a trade or exit. You simply watch how the market responds to pressure. Does it absorb the pressure, or does it crumble under it? When you learn to read a trend like a living organism, you no longer fear reversals. You anticipate them, and that brings us to the final piece of the hidden law. The part that turns all of this into a complete system of observation.